Welcome to Open House, the real estate and mortgage show on News Talk 580 CFRA.
If you have any questions about mortgages or real estate, give us a call at 521-TALK. That's 521-8255.
Or text 1-800-580-CFRA.
With Frank Napolitano and Paul Rushforth, here is Steve Gregory.
Good morning, gentlemen.
Good morning, good morning.
Buongiorno.
Here we go.
Gray,
So-
long weekend, but a little gray.
Little gray,
To start.
much like your hair, Frank, actually.
Yeah, okay.
Little gray.
Yeah, I'm looking at your dark hair right now.
The jet black.
Now
Jet
talk
black
about-
is what I am.
Talk
buddy.
about light colored hair.
3
Good
seconds.
morning,
That's
Steve.
pretty good.
Hey,
3 seconds.
Here's the thing.
Good morning, Steve.
Here's the thing. I don't believe I would have a stitch of gray if I didn't have to deal with you guys every Saturday. That's for sure.
Well, look what you've done to me.
You were gray when you started
I'm
the
almost,
show, buddy.
I'm almost
were.
white.
Yeah.
Wasn't he?
Yeah.
Was he gray when we started?
Well, I get gray because I have to worry about my finances with all the breakfasts I buy for Frank. You know.
I wasn't gray until the first show.
The second show you were gray.
Second show.
Second show you were gray.
Just like
love
I
it.
am now.
Yeah,
Almost
I love
white.
it.
Yeah. What show are we on now again?
862.
862 shows, 18 years.
You're about to hit 500, Paul, so that's going to be a milestone.
I honestly believe by the time we get to 900, we should be good at this stuff.
I don't know about
we
that.
really should.
Let's
If
not,
we're
let's
not
not
good
press
now,
it.
we're in trouble already.
Yeah,
Let's not
exactly.
press it.
There's no hope.
Okay.
Last
There's
day of
no-
August, boys.
Yep.
But the way I look at it, 21 more days of summer.
Yeah, we go
See,
for a while.
Where I look at 4 days from now, we get a Bank of Canada drop.
Yeah.
that's the good
Is
news.
it gonna,
It's just
is it
gonna be a quarter?
Is it going to be a quarter? Is
Quarter
it gonna-
point. Yeah, quarter.
More economists are saying maybe more.
I don't know that we're going to see that in September. We might see it in October, but I don't think we'll see it in September. Again, GDP numbers came out yesterday, and again, we take away government spending,
Yeah.
so families aren't spending, Canadians aren't spending, but the government is, so it makes the numbers look much better than they should be. And I think the U.S. is feeling the same way. Take away government spending, and we're actually at the start of a recession. But again, the governments have done a good job. But what happened over the last 10 days is a lot of the Treasury. So all the governors of Treasury across the world got together. Most G7
Boy,
countries.
that must have been a fun party.
Yeah, that would have been a blast.
All of them flew in their private planes. They go to a very remote city in Wyoming, and they meet. And they've all come to terms. The one thing that we're really noticing is that we've been talking over the last 2 years about inflation. They now are content that inflation's no longer the problem.
Mm-hmm.
Inflation's not the issue that we should be worried about. Inflation's pretty well going to start to come down and will continually come down. So now their concern is employment. The biggest concern right now is whether the economy continues to sustain what it's doing. And their biggest worry is unemployment numbers going up tremendously, which would impact the economy so much more than inflation has. And but, you know, the one thing with the inflation, so inflation's now under control. What most Canadians and most people around the world want to see is they want to see prices go back to the way they were, specifically on groceries.
Never going to happen.
On many things, but that's the problem. So I think they've come to terms with the fact that we're not going to see deflation. We're just going to see inflation now back to normal. Now we need to worry about the employment picture across the world.
Unemployment, immigration. I mean, we have so many people coming into Canada right now. I think I saw on
a million a
there
year.
was like a million a year coming into Canada right now, and that's too many. I mean, one, we don't have the housing infrastructure, and two, we don't have the medical infrastructure. Like hospitals are overwhelmed, doctors overwhelmed.
We don't have it for what we have now.
We don't have it for what we have right now, and when we have more immigrants coming into the country, I mean,
they've taken jobs
they've
away
taken
from
jobs away from
Canadians.
Canadians, yeah.
Well, yes and no. Yes and no.
Well, no, but they're not Canadians yet. Like
Right.
a lot of them have temporary status, so they're taking jobs away from. So the unemployment rate is extremely high when it comes to 15 to 24-year-olds, and though during the summer they're the ones who typically will get jobs, mostly service jobs, but they haven't been available this year because a lot of the temporary immigrants have taken away those jobs.
Yeah, but a year and a half ago, we were screaming for people. They wouldn't
100%.
take Canadians wouldn't take.
Well,
those
we still
jobs.
are. Some service industry are screaming for people. There's still jobs out there. It's just I honestly think our society has become very lazy.
Mm-hmm.
It really has. Our society's become lazy. people don't want to work anymore. And it's, I know I'm painting everyone with a brush, but it's true. I mean, there's people.
But if people don't want those jobs, somebody's got to do them.
Yeah.
So they're not really taking away jobs from Canadians so much as they're filling a void.
Well, and listen, we are not criticizing people coming in for an opportunity here in Canada at all. What we're saying is if we are having all these people coming into Canada, we have to help, we have to increase our infrastructure. We have to build more homes. Oh, yeah. I mean, I'm very lucky to work with one of the best builders in the city. And listen, he'll tell you, trying to get a shovel in the ground with the bureaucracy you have to go through is hard. It's really, really hard. And, and then you look at the medical. I mean, don't go to the emergency room now. You're in trouble if you go to the emergency room. You're sitting there for, 15 to 17 hours. Yeah. So we're in trouble that way.
Politicians are the problem because they say one thing and they don't back it up. And this has been happening for hundreds of years, but it's becoming more of a focal point now. So you can't come out and say we're going to build more homes and then increase the cost of permits, increase the cost of developing land. One hand doesn't follow the other hand, and that's the problem. And that's why we're seeing less homes being built as opposed to more, when clearly the governments are coming out saying we need more homes, we need more homes.
But a lot of the less homes is interest rates.
What's that?
A lot of people building fewer
homes.
Is it
though? Because if the development charges come down, then interest rates become less of an issue because the house won't cost as much.
Listen, we are very fortunate to have the builder that I'm working with, Clement Homes. Charles is coming on the show in a couple weeks, and I'm hoping he will touch on what it costs now to build a home. I mean, people see these new homes are super expensive, but builders have a lot of cost in those new homes. I mean, just
a lot of upfront costs.
A lot of upfront costs. I mean, just to get shovels in the ground is very, very expensive, and they're having to shoulder a lot of that loan. And I talked to Charles a little bit about the loans that he needs to build all these homes, and they're not at 1% and 2% anymore. They're very, very high. So he's coming on the show in a couple of weeks, and he'll probably touch on how hard it is to get shovels in the ground and what it actually costs to get a shovel in the ground.
And yet, if you listen to politicians, it's much easier than it was 2 years ago. Is that not true?
Once again, I'll let Charles answer that, but I will tell you that talking to him and talking to other builders, it's really, really tough. I mean, I know they said, we're taking away all this red tape and it's going to be so easy to get shovels in the ground.
They haven't done it yet.
Well, it may be a little bit easier, but it's not. I mean,
there's too many levels of government.
There's too many levels of government. And listen, you can go to the States and to get a shovel in the ground, you just sort of ask, when the shovel's in the ground. Canada's a little bit different. And unless they start, taking away some of those regulations and some of those, strict policies, we need to get shovels in the ground. That's number one.
In the States, they encourage growth.
They do
want more growth.
They do want more growth.
It seems like we kind of want it, but we don't.
Yeah.
So, I think they say they want it, but they don't want to do what's involved in really showing that we do want more homes. And it's a challenge. And I don't think the more homes are needed in Toronto. I don't think the more homes are needed in Vancouver.
No, fewer people.
Fewer people is what's needed there. We need, if you're going to open up immigration, then build homes in grow other cities that need some growth and have land that's affordable, and therefore you can build homes at a reasonable price as opposed to doing it in cities like Toronto and Vancouver. That's not where you need the homes.
Well, in Toronto right now, there's more cranes in the sky building high-rise condominiums than anywhere in the world.
Except for
in Toronto.
They're struggling with condos today in Toronto. There's a lot of people selling their condos because
they can't sell them.
Once these mortgages come up for renewal, and a lot of people bought them as investment properties, condo fees have gone up. Property taxes have gone up. And again, Toronto's raised property taxes 7%, 8%, 9%. And now they're going to have a mortgage that they originally got at 1.5% to 2%, going in at 4.5%. Yeah. The cash flow is just not going to be there.
There's a lot of condos.
There is going to be.
No, there is now.
Oh, there is. And there's going to be more, potentially more.
Yeah, well, your daughter must tell you a little bit about what's going on in Toronto. She's a realtor in Toronto.
Yeah, condos are a tough sell right now in Toronto.
Yeah, I can believe it. Even with the amount of people coming to Toronto and the amount they're building, that's why there's a lot of people from Toronto coming to Ottawa. I mean, affordability is a lot easier here. You get a
$650, you're getting a one-bedroom condo
in
with
Toronto, and here
$700 condo fees a month.
Here you're getting a beautiful townhome for 3-bed, 3-bath, right?
Yeah. So here, would you say 500,000 to 600,000? You're getting a townhome. 7 to 8, you're into a single family home.
It all depends where you're buying and where you're building, and I mean, if you're looking more into the core, no, you're not getting in for those prices. If you're looking more into the outskirts, absolutely, you're getting in.
You're not getting a townhome for 5, 6.
Well, you are when you're working with my builder. when you're working with Clement Homes, you're getting them for sometimes in the low fives.
Really?
But you're buying outside the city a little
You're
bit.
buying in Rockland, you're buying in Embrun,
Right.
Russell, those type of places, absolutely.
So you work in the East End, you work from home, you're okay. If you're working downtown, that's a little bit of a challenge, right? Now, I know the LRT is supposed to. You should be able to get, to Orleans and then be able to get on the LRT and get here in a reasonable time, but it needs to be more reliable.
Well, you know what? When you talk about, I just talked about those subdivisions. When you look at Embrun, you're very close to the highway there. Yes, Rockland. I mean, you have the 2-lane highway, but you're not far from Orleans. Like, I mean, you're really a hop, skip, and a jump from Orleans. It's not far at all.
I'm laughing about LRT because I remember years ago, before it was built, asking you guys, if you got a property along the line, would that increase in value quicker?
It should.
Well, it should.
Well, I guess it's got to work in order for that to happen, right?
Wow. And even like, I know this is a little bit off topic, and we got to go to the break, but. Even
you're talking, it's okay. We can go longer.
Yeah, we can go longer because I'm talking for sure. But we're talking about the Senators. They're in a crunch to see whether they're going to build in LeBreton Flats.
Yeah, they have to decide next week.
Well,
don't they?
So right now they're built on 75 acres, and the NCC has given them 5 acres. So 5 acres, and so they're like, okay, well, let's avoid the parking because everyone will come on the LRT. Well, the LRT doesn't work. So how do you come on the LRT? So you can't avoid parking. So I don't think that spot's going to work.
Yeah, don't get me started on parking. Like, you're not allowed to drive a car anywhere.
No.
They're building all these things, and there's no underground parking. There's no parking anywhere.
Even the new hospital by the Civic, they're taking away parking because our mayor believes that you should be biking everywhere.
But that's the first thing that they've built is the parking garage is pretty well built already before the hospital.
Yeah.
So when I drive by there.
521-TALK, 521-8255. We will be right back.
Turn to Open House, the real estate and mortgage show on News Talk 580 CFRA.
We're back. Paul Rushforth here, Frank Napolitano here. I'm Steve, your host.
And Greg Tilley's here. Don't forget Greg's here, my wonderful photographer, videographer.
We were talking to Greg before we got on about these homes that you're working with and the quality of the build. Now, you've been in enough homes.
Oh, I estimated I've probably shot 40-some thousand houses.
40,000 houses.
Yeah. So I've shot a ton of homes. I got to tell you, I was really impressed when we first started working with Charles and CH Clement Construction. The builds are amazing. Like,
now, what's the difference? What makes them?
They're building with concrete for a lot of their stuff, and not just foundations. Like, I know the condos that we did in Embrun were all concrete, walls, ceiling, everything. The builds are made. They are dead silent inside. The air quality is beautiful. The towns that we've been doing in Rockland, I mean, amazing. The what is it called, Paul? The party wall?
The party wall,
between them. They're all concrete between them.
I've hit that wall a few times.
You can't hear a thing in those places. Like, and the quality of construction is just great.
So you're paying a premium for that?
You're actually not. I mean, Charles is very reasonable when it comes to his pricing, but the beauty of this is I've worked with a number of builders. I can honestly say I don't think I've ever worked with a builder like Charles at Clement Homes. And here's why. I remember saying to him one time, he was doing a video and we were talking about the condos and he was showing me the radiant heated floors and the concrete walls and the concrete ceiling. And I remember looking at him and I said, Charles, like, you're a builder. You're in the business of profit. Like, you're losing a lot of profit by building like this. And his response to me was, I don't care. It's my name. When it's Clement Homes and you're Charles Clement and Natalie Clement, it's your name. And so his response was, listen, I not only want you buying a home, I want your kids buying a home because you're so proud of your home and their kids buying a home. And I never want to come back and have to repair something because I cheaped out on this or I cheaped out on that. So that's why he builds to the highest spec I've ever seen a builder ever build with. And his prices are so reasonable. It's absolutely crazy. You're getting,
and a lot of it is things you don't see, which is surprising.
A lot of it is things that I know about that I can relay. Greg knows about because he's shot videos in there. Some people don't see it because they're behind walls. They're this, that. But his you go to some builders and everything's like everything you have to upgrade. Like, it comes with carpet and linoleum and all this stuff. Everything's, hardwood, ceramics, granite. These are all standards with Charles. And his prices are like, we're building condos, at low fours, and we're building towns in the low fours. Low fives for towns. And you don't see towns. Even I know it's, you're a little bit out the outskirts of the city, but you're only in Rockland. He's got a subdivision coming in Russell. We have more, 220 odd homes coming in Rockland again. We're starting to sell those in September-ish. And we have singles coming in Rockland as well, coming up in September-ish as well. So he's got a lot of product coming up, and his build is unbelievable, and his prices are so good. I mean, you can go to our website and see that. You can also go to clementhomes.ca to see what he's building and stuff. But I'm telling you right now, he's coming on the show, like I said, in 2 weeks. And these are some of the questions we're going to ask him. Like, how are you building? Why are you different than everybody else? Where are you building? And the other thing that I think is really, really important is what we touched on earlier. What are the costs associated with building before you even put a shovel in the ground? Yeah. So those are things that I think Charles is going to comment on. And it's going to be great to hear from a builder himself. I can say what I say, but I'm not the one building these homes. But Charles will be the one who will fill us in on that stuff. That's in 2 weeks.
Well, it's nice to hear some good numbers because the Equifax report wasn't so hot. My goodness.
But it's been coming.
Who's going to buy these first-time homes with what we've got? Consumer debt up more than 4% in the second quarter alone.
Yeah, credit cards are keeping a lot of people afloat, and that's not necessarily healthy long term. It might get you over the hump, but if credit cards are being used by renters, then it's going to be hard to get those credit cards paid off. So we'll probably see delinquencies start to spike. And we'll probably see consumer proposals.
Now, yeah.
No, but even more.
Yeah.
And consumer proposals and or bankruptcy start to spike as well. And, I think you don't see as many of them in the fall. You tend to see a lot of them in January, February, March, specifically from businesses because they want to try and make hay during the Christmas season. But it'll be interesting to see what this Christmas season's like. I mean, again, Canadians are struggling.
Yeah, it's going to be lean.
Canadians are struggling, right? So if your credit card balances are up the way they are and people are missing payments at more elevated levels, interestingly enough, we're not seeing it as much on the mortgage side. I mean, there's concern that mortgages are going to go to a level where people are going to start to miss them. But so far, we haven't seen that. And again, now we're entering a territory where interest rates are coming down. Now, where we might see them is the Canadians, that got mortgages 5 years ago and we're about to hit that. We're still about, 10 months away, 9 months away from those ultra low interest rates that Canadians got on mortgages.
I'm 2 months.
You're 2 months? Yeah,
2 months.
Yeah, but you don't have a 1.5. So I
have a 2.7. I have 2.7.
Right.
Yeah.
Right. So all the maturities this year have been, mid twos to mid threes, where next, at this time next year, the maturities will be mid ones to high ones. So, big difference. That's why we need to see these.
But by then we
come
should
down.
be at 3%.
So Frank, what do we?
I don't know. I don't know that we're going to be at 3 yet. There's not a lot of economists that think we're going to hit 3% on the 5-year fixed. I think we'll be in the threes, but 3.79, 3.89. I think by January, February, we'll be in the high threes. To be honest with you.
So Frank, I get this question all the time. When are the rate drops? What do you predict they're going to come down? And when do you think we're going to be in those low fours, maybe high threes?
Well, the low fours, I think, by the end of the year. So we're going to start to see the low fours on a 5-year fix by the end of the year. We're in the mid fours now. I think we've got a 0.25% drop coming September 4th.
Which is Wednesday.
September 18th is a big day because September 18th is the U.S. Treasury. If they do a 0.25 point, then I say we do another 0.25 point in October. If they do a 0.5 point, then I think 0.5 point's on the table in Canada on October 23rd as well. So, but at the very least, we'll probably see another quarter, and then we'll see another quarter on December 11th. So
we
all
got
of a sudden,
3 quarters by the end of the year.
On prime. So if you're in an adjustable or variable rate mortgage, that's fantastic.
Yeah.
We haven't seen the fixed rates keep pace, but it doesn't mean that they're not going to start to catch up. I think the reason we haven't seen the fixed rates keep pace is because the U.S. hasn't done anything yet. We need the U.S. to start lowering. Now, if they only lower a 0.25 point, I think that's expected right now. It's if they do the half that we'll really start to see the bond market start to react to the fact that if U.S. Treasury is dropping a half, I think in England they're going to drop a 0.25 point. I think we're going to start to see the G7 countries start to drop their prime rates. And if we start to see that consistently, that's when we're going to see the fixed rates come down. So I think, if somebody's buying from a builder, the one thing I'll say, buying from a builder, the benefit, we're in a declining interest rate environment. So that's good because your house may not be ready for 6, 8, 12 months. So by then, the interest rates will be lower than they are today. And the ability to be able to get a 30-year amortization if you're a first-time home buyer. So that will help you as well. So you put the combination of those two together and you're buying from a builder, you're probably in pretty good shape when you get the house, which is probably going to be next spring, next summer, next fall.
And a little extra time to save.
Well, more time to save, more time to get yourself prepared, pay off some debts maybe. Put yourself in a stronger position to be able to buy the home.
I know we have to go to break, but let's quickly talk about where you see it by next summer then. When are the next rate announcements in 2025?
Well, so January 29, there's another one in March. But I know the first one in January is on the 29th of January. If you talk to most economists, they range anywhere between prime rates. So today we're at 4.5. Most of them think the prime rate will be between 2 and 2 3/4 by the end of next year. So, if we see 3/4 of a point this year, that means another 1.25 between now and the end of next year. I think a lot of them are going to happen in the first half of the year and maybe a little less in the second half of the year. Because I think we need to get to June and July, which is when those mortgages mature. We need to get to lower rates by June and July so that there's that people can breathe and say, okay, we're not having to renew from 1.5 to 4.5. We're able maybe to get to 3.5%, and then we can kind of tolerate that.
That optimism is going to help the real estate market
in the spring.
Take off.
Spring for sure.
Take off, absolutely.
Did we panic? Did we raise too much too quick?
Well, no, what I think happened is I think the government and the Bank of Canada weren't on the same page when it came to inflation. So where the government, I think, was putting pressure on the Bank of Canada not to start increasing sooner, and in hindsight, they should have because we still had some lockdowns happening. COVID wasn't quite under control yet. So I think if Bank of Governor had his way and he had a redo, he would have probably started to raise prime rate in the fall of 2021. So that we wouldn't have the increases that we did in 2022 and into 2023. But again, hindsight's 2020. So
wasn't he the guy saying at that time that interest rates are going to stay low
and go variable?
He did. What he didn't count on is COVID lasting as long as it did, and the effects on it,
well,
and
the supply,
supply issues, and more importantly, what he didn't count on is the massive government spending. I mean, it was massive in Canada, but it was massive in the U.S. and everywhere else that really created the inflation that we have today.
521-TALK, 521-8255. We will be right back.
Mortgage Show on News Talk 580 CFRA.
Welcome back. All right, Paul, you've always talked about credit card balances and how you should pay it off.
Yep.
What do you think is the average credit card balance for Canadians right now?
It's going to be ugly and scary. I'm going to say, I don't want to talk about my balance, but I'm going to say something like 15 to 17,000.
No, credit card balance.
15 to 17,000. No,
that's $4,300.
Oh, sorry, I'm way off.
And I thought that was high.
Yeah, seriously.
Well, that's what happens when you have an ex-wife.
We all don't travel in your world, Paul.
Sorry, what was that, Frank?
That's what happens when you have an ex-wife and a wife.
Oh, jeez, that was mean.
Send those emails to Frank
at Mortgage Brokers.
No, my wife lost her credit card, and I didn't report it stolen. The person who found it spends less than she does.
So that's a Facebook. That's right.
But it's scary because 1 in every 17 Canadians, 26 to 35, has missed a credit card payment in the last quarter. 1 in 17.
We've said this right from the start. I mean, Frank's talked about this ad nauseum. You can't get behind on your credit card. Some of them are 19, 20, 21, 22% interest. Yeah. And you paid the minimum on that. You will never get ahead.
I know. Say it. The statements will tell you if you make the minimum payment, you'll pay it off in 70 years. It's like,
Now,
I'm 60.
Now, Greg's here videoing this, and this goes to my assistant Jocelyn, so she sees this. But you know what Jocelyn used to do years ago?
I think I remember.
She used to max out her credit card and pay the minimum, but keep it maxed out so no one would steal her credit card and use it.
Oh, Joss. Oh,
sorry,
boy,
Joss. I had
to
say that on radio. I'm so sorry.
But here's my question. If we're carrying this much debt And you're 26 to 35. Where are the first-time homebuyers going to come from? Their credit ratings are going to be brutal if they've missed payments.
Well, and again, I mean, so credit cards is number 2 on the list of missed payments.
Cell phone.
Cell phone's number 1. It is to me, that's the craziest stat that's out there, because most young people cannot live without their cell phone at all, and yet they will make their credit card payments, they'll make all their other payments, and somehow because cell phones started showing up on credit bureaus about 7-8 years ago, and to me it was fascinating to see how if there was a late payment of anything, it was always the cell phone. It was always the credit cards were up to date, the cell phone would be the one.
Now I saw this online on social media, so I can't verify these numbers are true, but I think it came from a very reputable source. What do you think the average age of a first-time home buyer is right now?
I would say 31.
So it's 30.
So it differs from city to city.
But yeah, it does. And from country to country, we're about right in the middle. There's some countries that are much higher, like, I think it was maybe Australia, that's like 40, the average age of the first-time home buyer. We're at 30 in Canada, but this is the first time we've been in the 30s.
Wow.
So it is rising because costs are you just talked about debt with credit card. There's loads more debts. You got groceries, you got credit cards, cell phone.
You got to pay
bill.
high rent.
Yeah, high rent.
And you're carrying a lot of credit card debt.
Yeah. There's two things that you have to get out of as quick as possible if you want to make money.
A marriage?
Yeah, I held on too long there too. Yeah, but you're right. Yes, but I held on way too long. Yeah. So, anyways, but it's now I've lost my thought. But
I know I'm very bad at this hosting.
Yeah, you are a terrible host. You really are. You're supposed to make us look good, Steve. You're making me look bad now. But there's two things that you really need to get out of really quick if you want to build up equity and get into home ownership, and one is rent and one is credit card.
Yeah.
I mean, those are two of your biggest debts. I mean, it's hard to get out of the rent trap. I mean, rent nowadays, for a townhome in suburbia is 25, 26, sometimes even 27. Smaller ones are a little bit lower. So let's say on average it's 2,500. Now you got utilities on top of that. So now let's average about 28, somewhere in that range. It's hard for someone to save when they're spending about $2,800 in rent and utilities. It's hard for someone to save when their credit card debt on average is $4,300 and the percentage,
and they keep adding to it.
And the percentage is 21%. It's really, really hard. I'd like to see people get out of that rent and get out of that credit card as soon as possible.
Some people can't, Paul. That's the problem.
I agree.
They don't want to. They don't aspire to. They just don't have any choice. Number one, we have banks that are giving away credit cards like it's candy. That's one of the bigger issues. They're so strict on mortgages, and I get it. We have to be strict on mortgage financing. But then they're lax on getting a car loan. They're lax on giving away credit cards. And the government doesn't hold the banks accountable. Here's the banks that are making $12, $15 billion a year, and they're making it off of hardworking Canadians that are struggling to make ends meet. And what these banks are doing is they're issuing more credit cards than ever at 20, 24, 28%. And therefore, Canadians can't get further ahead. And, a lot of people say, well, that's why all the bankruptcies are there. Banks have calculated that if they can charge 28% for credit cards, they can handle those bankruptcies. That's okay. But the bankruptcies then set Canadians back, because once you have a bankruptcy or a consumer proposal, you're going to be in the rent game for a lot longer because you're not going to be able to buy.
Yeah.
You're just not going to be able to buy. You can't get a mortgage through a major bank unless the bankruptcy's right off the credit bureau. And if that bank was involved in the credit in the bankruptcy, you're unlikely to be able to borrow from that bank for a long time, because they're now with technology, they don't unsee it. They can never unsee it. Once it's on their system, it's on their system forever.
Let's and Frank, we're going to transition to a little bit of optimism now, Stephen. And one of the reasons, Stephen, well, because I'm mad at you still from the last comment. I'm still mad at you, Stephen. But let's transition to a little bit of optimism. And one of the reasons, Frank, that I asked you, where do you see rates going? When are the next rate drops? Where are we going to be at the end of this year? Where are we going to be at the end of 2025 or even into the summer? Is because we are starting to see a little bit of optimism right now in the real estate market as we're seeing rates coming down and the thought of rates even coming down even further. We're starting to see listings not as high anymore and sales coming up a little bit, which is absolutely great.
Sorry, not as high price-wise or not
No,
as many
listings not as many. Like they're starting week over week. They're starting
still 4,000. No?
There's tons. There's still tons. Yeah, there's there's almost 5,000. There's 4,900 listings on the market.
6 months ago we were at 2,000.
Oh yeah, 2,000-3,000.
Right?
Yeah, we weren't as high.
So significant increase though in the last 6 months.
Yeah,
even though we've seen stability with the interest rates.
But the optimism is definitely coming, and that's really, really good because I've said before, a third of our market is usually first-time home buyers, okay? And then you average in the people who are buying for investment purposes, you're almost half of the market. Well, let's be honest. First-time home buyers are out of the market right now because of the rates and the prices, and the people who are looking for rentals are kind of out of the market because you can't be cash flow positive. They're starting to come back slowly, and I think that's why I asked Frank, let's increase the optimism here. Let's talk about how do we get first-time home buyers. And with Frank saying rates are coming down here, maybe a half point here, a quarter point here, we're going to be in the mid-twos by here. I believe that the market is going to start to take off, and I want to see those first-time home buyers get back in the market. I want to see the people who are buying investment properties get back in the market, and that will really spur the market. That's 50% of our market right there.
Just to be clear, I never said mid-twos. I said the Bank of Canada will be at 2.5%. But that doesn't mean that's not what the banks charge because the banks are 2.2 above that. So that would bring prime to 4.7.
Mid-threes.
And if you're able to get a mortgage of prime -1, prime -90, now you're in the mid-threes, which is reasonable for a variable.
But you said
and
that
at
maybe
the same
summer?
time,
Summer, end of year.
Yeah, by summer to end of year of next year.
Mid-threes, okay.
But likely in the summer. I think we could start 2025 with a 5-year fixed insured, which means that you're buying it with less than 20% down at 3.99. I think that's a possibility. If we start to see the prime rate come down that 0.75 of a point, which is expected in the next 4 months, I wouldn't be shocked. Now, again, they might be at 4.19, but I think we're going to be very close to that 3.99, which that number has this magical effect on people. What I think we need to do, though, Paul, and I know this may not be popular for a lot of investors to hear, but I think in Australia, the one thing they did when they had a housing shortage, they made it so that if you want to buy an investment property, you must have a minimum of 35% down. So
why would they do
that?
Why would they do that?
The reason, again, if we have a shortage of houses and if we are, again, in a scenario where we're not building them as quickly as we should, I can see the government instituting something like that. They haven't done it yet.
But don't you want rentals available, though? Don't you want more investors to get more rentals?
I just heard nails on a chalkboard when Frank said that because I believe in the States they allow you to get ahead. In Canada, they squash you.
But in the States, they're building. That's the difference. In the States, they'll build houses easy. Here we put obstacles in place to build houses. So if we can't get rid of the obstacles, then the next solution would be to make it more difficult for investors to buy investment properties so that first-time home buyers can get into them and not have to fight and not have price wars, which in essence drive up the values of homes.
So punish one to help another.
But that seems to be what we've been going through for the last 10, 15, 20 years in our country, unfortunately.
We're already seeing people here not being able to get ahead. I mean, like I'm looking to flip homes, but it's so expensive to flip homes.
But you know what happens then? Your investment dollars go somewhere else.
Yeah,
they go out of the country.
Well, that's the problem right now with the latest moves that they've made when it comes to capital gains. That's exactly what's happening. Yeah. Investment dollars are leaving our country because they're handcuffing people is what they're doing. So
they're not allowing us to get ahead, and they're totally handcuffing people.
And listen, are we ever taxed? Like the taxes have to.
This is the optimistic part of the show.
Where's the optimism? Frank? You've taken my optimism.
No, what I'm trying to say is the government needs to help us now. It's on the government to help Canadians now, which shouldn't be builders. It should be the governments that should be helping Canadians get ahead.
100% agree.
On all three.
We ended on optimism.
Hold on, did I just say I agree with Frank?
You say it 6 times a show.
Did I really just say that?
Greg, we will get to your call as soon as we come back. 521-TALK, 521-8255.
The Real Estate and Mortgage Show on News Talk 580 CFRA.
Welcome back to the phones. We go and say hello to Greg and Gatineau. Hello, Greg.
Yes, hello. Thanks very much for taking my call here, and I just was calling to get some advice. I'm in a situation where I'm on a 5-year fixed right now at 1.89, and
that's
it
nice.
runs out September 17th
Of this year?
Yes.
Oh, you took a 3-year in 2022 or a 4-year in 2021? Then.
I took a 4-year.
Yeah,
Unfortunately,
in
I should have
2021.
taken the
Frank's
5.
good. He
but
knows
it
what
was
he's
the
talking
cheapest
about.
rate.
Damn, you should have taken the 5-year, eh?
Yeah.
Yeah.
No,
Hindsight's
but,
2020.
You're not helping him so far.
Hindsight's 2020.
Where's the optimism, Frank?
Well, Tiff Macklem was in the back of mind telling him that interest rates are going to stay low for a long time. That's what made you made the decision.
What's your question, Greg?
It was that. So here's a scenario. RBC's offered me 4.64 for 4 years. There's a principal amount of about $65,000 left on the house. So I'm wondering, is it worth it just to sign for it and get it over with, or should I put it on a home equity line of credit and sort of roll the dice there that rates are going to drop and then try to renew in 6 months' time? The research I've done there, it looks like every 0.1 of a point that it drops, there will be about $100 interest total in the cost of the mortgage. So,
Yeah.
I guess what's your advice? What would you do?
Well, there's a lot of people saying, I wish I had a $65,000 mortgage out there. So that's number one. I mean, your mortgage is $65,000 isn't chump change, but in the mortgage world, it's chump change. I mean, you've got a very small mortgage, which is excellent. You put yourself in great position based on the fact you've had this great rate for the last 4 years. And now you've got, a relatively small mortgage, even though it's still $65,000. My advice would be I would go, you should be able to get an adjustable rate mortgage in the prime less 0.9, a variable rate. So Royal Bank is variable, 0.9% below prime. So if you get 0.9 below prime, today it's 6.7, Wednesday it'll be 6.45, you're at 5.55. So that's a 1% difference between that and what they're offering you on a 4-year. If prime rate comes down 0.75 of a point between now and December, you're now about 0.25% off what the 4-year would be, but you've got an opportunity in December, if you wanted to convert it to a fixed, and at that time, well, you shouldn't be 4.64. You might be 4.14 or 4.24 or even 4% or maybe 3.99. So you're in a much better position if you had to lock in, but I wouldn't even lock in then. I would ride this out now until next summer, next fall in the adjustable variable, which I believe that by probably the end of January, your variable rate will match what they offered you on a 4-year, and now you're at par. It's cost you a little bit more for the first 4 or 5 months, but now everything after that is going to be gravy for you because we're going to continually see Bank of Canada drop prime rate, which means your rate will be lower than what you would have signed on a 4-year, and you'll be able to lock in maybe in the summer and or fall if you wanted to at something that starts with a 3. That's what I would do if I was in your shoes.
All right. Okay.
So,
excellent. Well, we'll see what the bank says when I meet with them next Thursday, actually, because they want to do the renewal then, and I can certainly ask them about the variable.
When's your maturity?
17th of September.
17th?
Yeah.
Yeah, make sure they process it on the 17th. Banks love processing it early. Right? No.
Yeah.
You keep that low rate right up until the 17th of September.
Yeah, the guy I've dealt with, actually, he's pretty good on that. Saying,
okay, good.
That's why we made it 2 weeks in advance.
Yeah, good. Good.
Yeah,
Smart move. Smart move. Not a lot of people are doing that. A lot of Canadians are being kind of enticed to early renew when they shouldn't be. But they don't know any better.
Yeah.
So.
No, I understand.
Well, you had a good run for 4 years.
No kidding.
Exactly.
Great run.
Great run.
Yeah, no, I was certainly happy with that. So, but I do thank you again for your advice.
Thanks, Greg.
Thanks, Greg.
Pleasure.
It pains me to say this, but Frank is really smart, eh?
When it comes to numbers, I am.
You are.
The number stuff, I remember, it's funny, a client will call me and say, Frank, we spoke 2 months ago, and I will remember until they start saying, I've got this amount of a mortgage, and I live here, and then everything comes back to me for some reason. So.
Yeah. It'd be nice if you said something nice about me once in a blue moon.
I do. When you're not on the show, we're always talking glowingly about you.
Oh, no. I actually hear what you guys say about me when I'm not on the show, and you trash me.
Oh, no. It's when we're off the air that we do that. I keep forgetting.
That's true. That's true.
Yes, to his face.
To his face.
Now, speaking of numbers, here's one that I shouldn't be surprised, I guess. If you're wondering where the first-time homebuyers are, they're living with their parents.
That's true.
More than 29% of Canadian households include adult children now. 29%.
What's considered adult first? What age?
Well,
is
not Paul or
adult?
me or you.
No, but I'm curious as to what.
That's ancient.
Like if it's 18, well, if 18 is considered an adult, well, I expect kids to stay at home until they're, if they're going to university, if somehow the kids can stay at home and go to university is expensive on its own. If a kid can remain, I know they want that lifestyle. They want to be able to be out on their own. But boy, I mean, going into debt in university is already challenging enough. And now if you have to include rent and everything else that goes with it, one of the kids that worked for us, a co-op student, and then we kept him on for a little bit, is going back for his last year of university. And he just moved back home because he said, you know what, I never realized how expensive it was.
Yeah.
Steve, I thought that number was going to be higher, to be honest with you.
Actually, it's higher in Ontario.
Yeah,
in Ontario, it's 33%.
33%.
So 29 in Canada, 33% in Ontario, which has got to tell you it's got to be the cost of housing.
Listen, I have
the cost of everything.
I have adult children right now. Like I got 22, 20, and 15. Like my kids, I don't know how they're going to afford a home. I know they're going to come to the bank of daddy for sure, but
not mommy, just daddy.
Frank, that's.
Well, I'm just saying.
Stirring the pot.
I'm just saying. It's the bank of mom and dad usually.
Yes, sir. Sorry, my bad.
Yeah.
But what I'm saying is it's going to be hard to afford a home at that age. And that's why we've seen our first-time home buyer creep up to 30 years old, where it was, we were in the 20s and now we're in 30s, which is disappointing because home ownership is a privilege. And it's the only way to get ahead is home ownership. And now we're in the 30s. Before long, if we keep going this way, we're at 31, 32, 35. And then by then, I mean, by the time you're...
Some countries are like that already.
Yeah.
Like you're into the 30s. And countries like Italy, again, I'm Italian.
You are?
They just inherit the house. Like in Italy, they don't go buy another house. They stay with their parents. They look after their aging parents. And when their aging parents go, it becomes their house.
But here's how things have changed. Let's go around the table. So, Greg, how old were you when you got your first house?
27.
Paul?
19.
Right?
24.
23 for me.
Yeah.
So just you go around the table, you can tell just by our ages.
Townhouse, $105,000.
Yeah.
My first home in 1987, $105,000 for a 1,600 square foot townhouse.
Well,
my first home was a single in Brampton for $53,000.
There you go. I mean, that shows how old you are.
But Frank, you said 87?
1987.
You meant 1947, right?
Yeah. Okay. No, that's Steve, not me. That's Steve.
How did I get in this? I just sit here quietly
because you're bragging about $53,000 in Brampton, so that's why you're getting into this. So.
Birthdays, Frank?
My one of our great mortgage agents, Vince Adams, celebrating his birthday this week. So happy birthday to Vince. And wishing everyone a happy long weekend. I don't know. People say it's the last long weekend of summer, which technically it is. But
it's not the end of summer, though.
It's not the end of summer. Thanksgiving's really, to me, the last long weekend of nice weather.
We will have the privilege, obviously, in the next couple of weeks of having Charles Clement from Clement Homes on the show. So get your builder questions. You can go to clementhomes.ca or paulrushforth.com, and you'll get to see Greg's wonderful pictures and videos of Charles's product. And also, I know I said last week, and I'm going to say it every week, big shout-out to Adam Cote and Angie Poirier with Little Nashi in Boston. Our hearts and thoughts are with you and praying for a speedy recovery and a successful journey in Boston. So
let's put Paul on. How do you spell Clement for the ones listening?
Stop! I'm not dumb. Clement.
Okay.
Yeah.
Is it?
Greg, is he right? For you English, it's Clement. For French, it's Clement.
Clement.ca.
How do you spell Paul? Have a great week, everybody.
Please continue to support local businesses and charities and home builders.